Hello, everyone. Thank you for joining us today. As we're waiting for people to gather, we would love everybody to go into the chat and introduce themselves, your name and your affiliation, if you could, maybe where you're dialing in from. And then if you could, just to get us warmed up, maybe name a great partnership or combination that is greater than the sum of its parts. This was inspired by the work that Andrea and I have done together over the years. The fundraising team and the finance team together, if it goes well, is definitely greater than the sum of its parts. So go ahead and throw all of that into the chat as we're gathering. We'll give it a couple more minutes and we'll get started. Wow, we've got representation from India. That's awesome. Welcome for us. Welcome, Al. Let us know if you can think of a great partnership or combination. Hello, Stephanie. The one we came up as a team, or I think as he came up with, was peanut butter and jelly. Can't beat it as a combination. Hi, Penny. Good to see you. Hi, Hannah. That's great to know. We have some Kel fans here and Mint Theater fans.
When did you work with the Mint?
It was over some months ago, from 2022, end of 2022, toward the end of spring of 2023. So we had a goal of raising 50K, but we exceeded $81,000 with a group of 4 people. So it's extraordinary for Mint.
Great.
Sorry,
Awesome.
I don't have video.
All right. Anybody else has some favorite combinations? The Beatles were definitely greater than the sum of the parts of their members. Totally agree, Josh. Can't not argue with that.
I was gonna say, doesn't Josh, I think, has a combo finance fundraising combo at home too, right? Aren't you Jessica's?
I confess I am the spouse of an incredible nonprofit finance person. So my experience with finance is a lot of osmosis.
That's awesome. Chocolate and raspberry. Yes, absolutely. Cookies and milk, Heidi. You cannot beat that. All right, well, I think we've gathered, we have a critical mass here, so I think let's get started. So my name is Sandra Davis. Welcome, everyone. I'm so glad you're here with us today. Really excited to gather together and talk with you about the joys and challenges of nonprofit finance. My pronouns are she, her, and I'm the founder and president of Donorly, and Donorly works with small and mid-sized nonprofits at moments of growth and change to build their fundraising muscle using donor research, storytelling, and community building. And before I started the company, I was an in-house fundraiser for a number of performing arts nonprofits, including the Public Theater and New York City Opera. And that's where Andrea and I worked so closely together, heading the development and finance roles. And so glad to have Andrea here today to talk with us and share her expertise. And Andrea, I'll pass it over to you and let you introduce yourself.
Sure. I am Andrea Nellis, she, her, and I am one of the founders and one of the principals of Arts FMS. We are a firm that specializes in source financial management for nonprofit arts groups. So we go in and replace finance departments and act as an organization's finance staff. And we, restrict our role to arts groups, and that's the world that we live in. And prior to consulting, I was a consultant for a while before that. And prior to that, I had been the controller at BAM. I've been the GM and the CFO at the Public, and I was the managing director at New York City Opera, along with Sandra. We were a team there, but we started Arts FMS about 2.5 years ago.
Thank you, Andrea. Okay, so just as a reminder, this call is being recorded, and what we've done is selected a series of questions from those submitted in advance. We're going to spend probably about 10 minutes on each question. And Izzy Weiner, who is part of our Donor team, is going to be kind of managing that question period for us, and we invite you to introduce yourself if she calls on you with your name and your pronouns, title, and organization, and then state your question. If you can't remember the question you submitted, Izzy will help you out. And if you didn't have time to submit a question, please go ahead and put it in the chat, and we'll be monitoring the chat and try to get through as many questions as we can. And feel free to put any follow-up questions as we're talking, or comments, responses in the chat too. We'd love this to be kind of a lively conversation. And, our goal is for this to be educational for all involved, not just those in the hot seat. So lastly, I just want to note, we did receive a number of questions that were very specific to fundraising itself. We want to keep this focused on nonprofit finance today, but still have some useful information for fundraisers. We are going to have a session in October with Kathy Hines. I think Kathy's here today. And we will be talking about major gifts fundraising. So that might be an opportunity to bring up those questions. And we'll send a wrap-up email after the session. So if you'd like to reach out to us or to Andrea with any follow-up questions, feel free to do that via email. All right, shall we get started?
Great. Well, welcome everyone again. It's a pleasure to see and have so many of you gathered here today. To kick us off, we have a question from Sharika from Beyond a Dream Incorporated. It was submitted and stood out to us because we thought it could be a nice grounding place around the topic of financial processes for nonprofit organizations. So I don't think we have Sharika here with us, but the question that was asked is, for nonprofits just starting out, how does a fiscal year go about being determined? And what reporting must be done to prepare for the end and subsequent start of an organization's fiscal year? So just to ground us in some best practices on that note, opening it up to Sandra and Andrea.
Great. I'll start off. Or do you want to? So, you set your fiscal year end date in your incorporation papers. It is set right from the start. And you go from there. You can, of course, change it at any time. I think that people think that changing it is going to change things, and it really doesn't. I would actually think twice, because sometimes it's a real pain. The main things that you need to do is and I'm going to state things for New York State mostly. Everybody in New York State has to file a 990, every nonprofit. And you, with the extended deadline, and you have 10.5 months past your fiscal year end date to file there, but you do need to file for an extension to get it to that 10.5 months. You need to do an audit if you're over $1 million in gross revenue. And that can include multi-year grants, but gross revenue is is defined, both temp restricted and unrestricted in there, and investment returns. Below that, above 250 in New York, you need a review, which is much lighter than a audit, but you get handed financial statements that look like an audit. I do know for people who are arts groups that Schubert is now allowing people to not have to do you don't have to do an audit unless you're over $750,000. I feel like that was the driver of audits for a lot of small theater companies in the US. What else on that? I just want to say though, everybody likes to discuss changing the fiscal year. And sometimes I will throw that out if I want to get off of a topic, but I think that no matter where your fiscal, I think when you think about changing a fiscal year, there's really no perfect time to change it to. So if I was going to start from scratch, I would probably start with the 12/31 fiscal year end. You see loads of dance companies are 12/31. I mean, otherwise in New York, a lot of arts groups are 6/30, because it used to be that the city Department of Cultural Affairs used to require 6/30 and frowned upon anybody who didn't have 6/30, but there isn't that anymore. And everything will happen once in a year, so it doesn't really matter if it's mid-season or not. I think also, if you are thinking about changing it, to try to keep it on a quarter end, because there are things in life that are driven by that. Payroll reports are by quarters, investment reports are quarters. So when you have those 8/31s, which there's a decent amount of 8/31 fiscal year end dates, it's more complicated accounting wise. So I don't know if people have other questions on that. I mean, the other thing in New York that you're required to do is a CHAR 500, which is the New York State tax filing. It's really actually a cover sheet to both your 990 and your audit, and it really just lists a couple of your government grants. You file that electronically.
I think a couple of advantages to the 6/30 timeframe for performing arts or for education organizations is it kind of aligns with your season or aligns with your school year. And I guess maybe one advantage might be that some of the paperwork and work gets split up between the end of the calendar year and the end of your fiscal year. So something to think about there. Instead
if you have a lot of government, if you have a lot of New York City funding, it's not a bad fiscal year. It keeps everything clean and aligned. I mean, I think that NYSCA's changed their fiscal year end date like 3 times in the last, so you don't want to chase things that are going to change. And I also think that, a lot of times theaters want it that way because of a season, but their seasons sometimes do change.
For those who aren't New Yorkers, NYSCA is New York State Council on the Arts, FYI.
Yeah. Right. I mean, New York State is on one fiscal year, the federal government is on a different fiscal year, and New York City is on a different fiscal year. So it's hard to chase those kinds of government. I do think there is an assumption in New York that 6/30 is your fiscal year end. It is the most common, but maybe you can get a cheaper audit if you have a March 31st, because I actually have no clients that have fiscal year. I have mostly 6/30, a lot of 12/31s, some 7/31s, some 8/31s, some 9/30s, a couple of 10/31s, and I have nothing between January and June. So
if you want to sign up with Andrea for services, maybe pick another month.
if you have a March 31st, I'll take it.
All right.
I wouldn't be surprised if you can get a cheaper audit.
Oh, good point. Good point. Let's jump to the next question, Izzy.
Great. Well, moving a little further into the presentation of financial documents, we have a question from Kim from Spring Into Sight Foundation, who asks, how should financial documents be best prepared and presented at board meetings? And specifically was wondering around budget and projection deliverables, as well as some techniques that can best make the case as clear as possible in a boardroom?
You know, I mean, I have a somewhat of a standard that I like to do, but I also differ. I think in a lot of my reports, depending on the culture and what's important to an organization, you know, I always like to maintain, you know, in just the physical design, you always maintain your board approved budget. If you have a more current projection, I would have that. And I always have year-to-date actuals and try to have a variance column between year-to-date actuals and the current projection. And a lot of times I do percentages also of that, because I think it gives you a quick and easy way to see if something's on track. You know, so I can point to that, you know, the more operational expenses should be matching the percentage of the year, but maybe your program expenses are off, and I can talk to that, but it gives me a quick look to see if we're in line. But you can go from there. You know, I think a lot of an organization that is fundraising heavy, I would include a risk analysis that I would divide fundraising between, you know, you have your goal, you have what's committed, what you have, what's highly likely, and you have what's prospects. So the board can interpret that and they can see the facts, because in most organizations, I would say that the risk is in income, not really in expenses. Most people stay on track in expenses, but it's if you're going to be able to hit your income goals. And I find that the columns are a good visual description of your risk. And actually, I stole that. I mean, we've done that, you and I, but Karen Hopkins years and years ago at BAM always did it that way. And I sort of feel of her, she's like the guru of those things.
I would say that I was just going to say that board members, just the overall question they're asking is, should I be worried? And so everything you're describing helps them understand if they should be worried or not.
Right. And really, I mean, I've worked in most organizations I have worked at are majority fundraise, not majority earned revenue. If you are majority earned revenue, I might think that your risk analysis is on the other thing, but I think that that's, you know, I want to identify risk. And to that end, I have actually almost always do a narrative, and I do it I make a sparse narrative, because people are really just reading bullet points, and I want a couple of points to get across, and I want to make sure that they're not hidden. But I usually do, you know, top line what I project as budget, you know, if there's a cash issue, where the cash position, and I will put areas of risk and areas of potential upside. But I want it to be clear that, you know, maybe we're not going to hit our gala goal, and maybe there's a potential loss of 500,000. And then it goes in the minutes correctly. Nobody can ever say you didn't say that. And it's just a nice record. Plus, I think sometimes, though, if you do too much a narrative, people don't read it. You know, bullet points that people who are barely glancing at things will see. I
would also say to make sure when you're sharing this kind of document with your board, you know, best practice is to send that well in advance, maybe a week in advance. Some bylaws require that. And there will be board members who are going to comb through that information, and then there'll be others who are going to look at it when they show up in the boardroom. But for the folks who comb through, you want them to have it in advance and ask any questions in advance also, so you're prepared to respond to that in the boardroom. And I would just second what Andrea said. If there is bad news to share, or you see bad news down the road, share it as soon as possible so the board isn't surprised later. Make sure to share good news too, though. If you've succeeded wildly about something, just make sure to really trumpet that, so that board meetings don't just become, you know, conversations about what hasn't been done, or what we don't know how to do, or what needs to get done. Make sure there's some celebration, and the numbers, you know, frequently can help you do that as well.
Cool. You know, and there's varying levels of who's going to look at things and who's going to pay attention, but you need to try to make it as easy as possible. I mean, no, not a budget, but I also think everybody should always hand out a balance sheet, even if it's not that detailed, but they should top line see your financial position, and the balance sheet really illustrates it in a way that a P&L or budget versus actuals will never illuminate it. So there usually is a couple of people who can read it, and you should be handing it out.
Great. Well, while having that conversation, we did have a couple of great questions come through the chat. I do want to invite Josh to come off mute and share his question that he sent along to me, because I think it's a natural extension of some best practices we were just talking about.
Oh, fine. Put me in the spotlight. So I've been at NJPAC for a couple of years now, and one thing that we've done for the past 2 years is when we get up to fiscal year end, there's always this big crush trying to get those pledges on the books before our fiscal year end so we can hit our goal. Everybody goes through this. But because of the time crunch of it, a lot of these confirmations of pledges are coming back via email, where we'll say, are you going to renew at X dollars this year? Can we count you in for this? And they email back and they say, yes, we do. I said, great. We'll email them a pledge form. Could you sign this and get it back to us? They never get the pledge form back to us because they figure in their point of view, they've emailed us that they've confirmed it. Why am I going to have to do this? So the question becomes, not just from a best practices point of view, but also from a legal point of view, is an email confirmation of a pledge enough? I checked with our finance office tells me that our auditors demand that we get signed pledge forms. So I'd love to hear from somebody else.
I don't work with any that require an email. Has always been so fine. I mean, in truth, pledge forms have a limited enforceability anyway, right? Even a signed one. Nobody goes and sues somebody for reneging on a pledge form. But I work with a wide range of auditors. The email is sufficient. And then most of the auditors I work with send a confirm letter for any outstanding pledge at year end when we're preparing for the audit. So then you have confirmation. And if somebody writes down a change or something, we will adjust the books. So I don't see, I assume you're doing confirm letters come audit time.
Yeah, we do acknowledgement letters
so then
of the pledge.
That the finance office should be sending out letters with the audit to anybody who owes money. I'd be curious if that's happening, because then that's redundant from getting a signed pledge letter. I mean, but an email is considered acceptable most often.
Yeah, that's what I thought too. I mean, we do send out acknowledgments to the pledge when we receive the email confirmation. So there's that side of it. We also send pledge reminders when a pledge is still outstanding. Hey, you haven't paid up on your $5,000 pledge. What gives?
You might ask the finance office if they also send confirm letters, because they might do that without you knowing.
Okay. I'll check.
We'll send that to vendors we owe money to, but the thing is, what's funny about confirmation letters, by audit requirements, they're only required for earned revenue. They're not required for contributed revenue, but most of the auditors I work with send them for contributed revenue too, because that's where the risk is. Most of us have very little earned revenue receivables. That's not how we live. But I'd be curious to know if they do that, I'd go back to them and saying, why doesn't that suffice on top of the email?
Okay, great. Thank you.
I wonder for your auditor, if they are still absolutely going to require that, would they accept something that is signed through DocuSign? Would that be easier on your donors?
We're looking at that now. I mean, obviously, we'd love to avoid the expense of having to take on DocuSign if it's not necessary. But that's something that we're floating for this fiscal year. So there's a strong possibility we'll have that in place. It's really just, I think it's the hassle for most people to have to print a PDF, sign it, scan it, email it back. even it seems to be a problem for them to sign a piece of paper that we send them and return the self-addressed stamped envelope that we include. So
I
don't
find
know.
it a problem for myself, right? I need to be near a printer. I'm not always near a printer.
Yeah. Yeah.
The other thing is you can get DocuSign relatively cheap through TechSoup.
Okay.
If you don't use a high volume, it's cheap until you get to a high volume.
Okay. TechSoup.
You
Thank
go
you.
through TechSoup. But I actually would push back and like even be part of the conversation with them.
Okay. Great. Thank you.
Sometimes not everybody interprets it the right way. I mean, I was told on a side thing, I was told by the Attorney General during bankruptcy of New York City Opera that the only thing we needed in paper was endowment documents.
Okay.
Otherwise, we could have all other records could be scanned and things like that. So when we heard that like direct from the mouth of the Attorney General as we were trying to pack up and what we needed to save and not save. So sometimes I think there's lore about what you have to have on paper and things like that.
Okay, great. Thank you.
Great. Well, looking ahead to our next question, I'm realizing that one that we had pulled out was sent in by Anne Marie from the Hyacinth Foundation, who I believe is on the call with us today. Hi, Anne Marie. We were really intrigued by your question that you shared, specifically around grant applications and how you present a narrative about a growing budget, specifically as it relates to program changes and growth. So I welcome you to come off mute and speak a bit more to your question and the context there.
Hi, I'm Anne Marie Williams. I'm the Director of Development for Hyacinth Foundation, and I am relatively new to, not to nonprofits, but I'm absolutely new to development, and certainly grant writing was not in my wheelhouse, so I started here. But I do have a 20-year background in finance, so I thought, oh, easy transition. Au contraire, it is not. But as I've been applying for various grants, I found that we are heavily state funded, and state funds programmatic stuff. Makes perfect sense. I get it. A lot of now the philanthropic arm of corporations also like to give stuff that's very specific and programmatic. So it makes it very difficult to be able to generate unrestricted funds for general operating. So my gear switch would be to have the ask be to expand upon programs that we already have. Where it becomes difficult is, say, for example, we have state-funded syringe access, syringe exchange program, and I want to be able to say, and we get, let's say, $10, right? So we get $10 from the state to run this program. Now I want the outreach to be go a little further, where we can give additional incentives to people that are coming for use of that program. So I'm not creating anything new, nor am I starting from the ground up. And the reality is we're talking about asks that are under $20,000, $5,000, $10,000, $15,000. And they're like, well, where's the budget? And I'm like, this budget kind of makes no sense, because if we're given a budget from the state for harm reduction, then that goes to a bazillion different things. So I feel like when I'm filling out these grant applications, that I'm not presenting it. It's possible that it can be taken without the intent that I'm trying to give, because it's like the budget is humongous, but really I just want to be able to cover the cost that the state grants that say, okay, we're not covering any salaries, we're just covering the program, or we're not covering any administrative costs, just the program. And I just don't know how to do it right. And since I've been just getting a lot of no's, I don't feel like it's the organization or the passion behind it. I think it's that I'm not presenting it
right. I mean, I almost think you need to be a little less literal, right? So let's say, and think of it as almost a fresh project, right? So that the state funding is just a portion. So if you're going to go for enhanced needle distribution, create the budget for that. And then you show your sources of revenue. And one of your sources is the state funding, right? Because it's not covering everything. Mm-hmm. And that's how, so I think sometimes we get hung up on being like, you're saying 1-to-1, the state's paying for this, but just pull out the pertinent part, put that in your expense budget, and think of it as almost a different project, right? or it's a distinct project. So, because I think, yeah, not to get hung up on the literalness of the state funding being just pure reimbursement, and tell your story. So your story is, we want to
Give a little more, whatever it is. Yeah.
Yeah, you know what it is. And then tell the story, and like, you know, the state funding is just a part of it. And those expenses are just a part of it. And then you can put your overhead, right? I think everybody should always have overhead, right? Or none of us here on this call would ever be paid for if grants didn't cover overhead, right? Because no fundraising and no finance is paid for. But, you know, you could add your overhead, you could add these other things that are outside of that, and the things that are inside of that, and just show that portion of revenue. But sometimes it's a silly thing to say, but sometimes you just have to sort of be bold with the budget, tell your story. Then you're not lying or you're just taking it out and looking at it from a different angle.
No, it's super helpful. I don't think I had that kind of perspective going. It just was in trying to be able to explain what it is that we want to do. And it's like, oh, if they have a focus on the HIV testing that we do, perhaps they have a focus on the wellness program. And it's like I'm doing one actually today. And they're like, well, you know, what's the budget for the program? And I'm like, this program has been running for the last 30 years. You know, I want to be able to give more gift cards out for food. I want to be able to hand out more kind of things. And it's just been rough for me to figure out how to quantify what we're looking to do if I have no idea if they are accepting, if the grant is from, you know, 0 to 100. It's like, well, if you give me 100, I can do this, but if you're giving me 50, I can do that. Like, what the hell?
Right. I mean, the other way to think about it too is to have columns for existing and enhanced, and think about it that way. So I just did that somewhere else, that we had a magazine online and we wanted to reinstate the print. So I did, you know, what we're paying for now, with the additional expenses to add that. And I showed them as two different columns. So you could see, you can pull it out, but it really was part of one whole.
Got it. Thank you very much.
Yeah. Just, you know, sort of twist it around and look at the data in a different way.
Thank you.
You're welcome. Is there anything else on this, or do we want? Was there anything else? You know, I just like, in grant budgets in general, I just want to make one comment too. You know, a lot of times we're working in the formats that somebody gives us, and they don't always make sense for the organization. I frequently just go down the path of treating it the same as I have in the past, as opposed to like I might do a NISCA budget for 6 people in one day. Everybody's is done a little different, and we have a different, but I always look at what I did the year before. I follow that pattern, because we don't always fit, you know, in the forms correctly. And so I also think, you know, keep that in mind, and not, you know, not get so hung up on the categories not fitting. You could put a little bit of a note, but if you keep following the same pattern, it stays in line, it looks right. So, and I frequently will keep a spreadsheet for multiple years. So I just add a new column through the next year, and then I can see what I did, and I have had my pattern set for those kinds of grants.
I think the other thing I would say too is, and this will not always work, but if you have somebody at the foundation that you can reach out to, even if you don't know them well, even if there's an info at email address or a, you know, office phone number or something, go ahead and reach out and ask these questions and try to help them help you. They're in the business of giving away money. And, you know, if they'll get on the phone with you, I find that they can be really generous in helping you understand how they want to see information. Sometimes they'll even let you send them a draft of what you're doing, narrative and budget, and get their comments before it goes final into a version of it that's going to go in front of their board. So, you know, see if they'll help you work through all of this. I think that they've probably seen it all before, and they can help you.
Thank you so much.
Great. Are there any other grant application related questions that come up on that front? I, of course, welcome folks to put more questions in the chat as we continue to move through some of our preset questions as well, because obviously there's a lot to dig into on that topic and beyond.
And I just want to say also that we have a standard budget template that we use with our clients for grant application. So when we send a follow-up email after this event, we'll go ahead and share that template. So we have one both for just a regular operating budget as well as a project budget. Could be helpful.
So for our next question, I want to welcome Kathy Hines to come off mic. There was a great question that was shared around ensuring fair allocation of overhead across programs and projects, and also more broadly, what trends and new directions we're seeing in relation to overhead allocation and program-specific funding.
Thanks, Izzy. It's Kathy Hines. My pronouns are she, her, and I'm an independent consultant in New York City. And I was wondering, and Andrea, nice to see you. I did realize that we have worked together in the past, so good to see you. Yeah, and so we know, and this does dovetail with some of the other questions and concerns about overhead and how we build into grant budgets proactively but fairly the expenses that we need to run nonprofits like development, well, maybe not development, but certainly finance, and so that we can fund all the back office work that we need to deliver services. So I wanted to hear your latest thoughts on that question, both in terms of what we show internally to show a P&L for individual projects and what we show to funders.
You want me to go, or do you want to go first, Sandra?
Go ahead. I'll jump in.
You know, I mean, I don't normally add on overhead internally. I do it usually on our statement of functionals at the end of the year. I think it can make internal budgets a mess if you start allocating, because then you can never tell if anything ever hits budget. And in fact, I actually try and undo that places, because you just can't tell. If you have rent allocated over every department, then how do you know you're hitting your budget? But you know, I think that the most fair way is to set a standard percentage for your organization, because I do worry when people get too literal, you're just chasing your tail and things change a little bit and the percentage is off. I've never had an auditor, you know, most auditors test your restricted grants, that you have the appropriate expenses, you know, between 20 and 25%, whatever one you choose for an organization. I haven't found any pushback. You know, there's plenty of salaries. I mean, you could back it up. Most often those numbers are easy to back up, but I think you choose a percentage and you stick with it and you go forward, and it's on all of your grant applications and you are covering things. And then, you know, all unrestricted and all earned revenue doesn't, you know, if you're looking to one-to-one fund something, if you have earned revenue, that is not restricted, right? So that could just be covering overhead. So you don't have to show that as going towards a project. You know, like if you are going to do a show and you have this much of ticket sales, this much of expenses, you could fund the entire show expenses with restricted funds. I don't know if that answered your question, but maybe you feel differently about it, Sandra.
Yeah, I think that I don't feel differently about it. I mean, I wish the idea of overhead didn't exist, really, because to run a nonprofit, the overhead isn't an option. It's not something that is an extra. And the way that overhead is calculated implies that somehow that's an extra. So, and I think there are times when we in the nonprofit world avoid resourcing our work well because of that assumption. I just wanted to mention that there are grantors that have percentages that they ask you to apply. So, follow their process if you need to. Otherwise, if I would always put overhead in an application that is specific to a program or a project, at minimum like 15%, but maybe closer to 25 or 30 if I felt like that was going to be a message that they could hear. How do you feel about that percentage, Andrea? As a rule of thumb, obviously it's varies from organization to organization.
I don't think it's a problem because so much of our work is really driven by salaries, right? And most organizations have 50% of their budget. Certainly in the performing arts, you never see a budget that is less than 50% salaries.
Yeah.
It just doesn't exist, right? It's a labor industry, and our labor, our work is all labor. And my sense is most of us, right, we're not building things. It's a labor industry, so I don't know how I think you can justify a lot. Sometimes as in the back end in finance, I will take, we do it at the end of the year, but sometimes when we have loads of restricted grants, I will take all of my salaries and divide it up. I will not, show that all the time, but it is easy to justify a very high percentage once you start allocating salaries.
Kathy, does that answer your question? Is there more nuance that we're not getting?
No, it does answer it. I think that I like to hear that, Andrea, that you push back when it's allocated internally, because it just does leave things, in my experience, which is only at one spot I've worked, it not only muddied the water, but it also led to internal jockeying and I think a lot of wasted time. I am curious, though, to follow up with the question about how much it's not can we get away with, but Sandra, you mentioned 25, 30, 35%. I think in addition to there being this unfortunate myth that these necessary expenses somehow aren't necessary, then there's the add-on myth that it's 15%. And so, Andrea, I guess I would want to know, are that 15% or maybe 20 should do it when you sit down with the numbers and you see often it doesn't, for reasons Andrea was just speaking to, and others. So how high have you seen it go, Andrea? And did it,
well, it depends. I mean,
yeah.
I think if you're just adding on a percentage, I don't know that I've seen higher than 25, but if you're going to be very specific about what people are being added on, then I think you could pretty much do 100%, right? I'm working somewhere, they just got a foundation gift and it's for expanding into Chicago. So every dollar of that, there are people who are going to go on full-time salary, but it's just the people, right? So you can, I think that overhead in some ways is the wrong word, because if our salaries are really programmed, I mean, the majority of people in an institution's salaries are programmed. I would argue just finance and just fundraising, and then depends on the kind of finance. Sometimes I could argue some finance people are a little bit programmed.
It's just, I feel like we twist ourselves in knots over this question so much. There's no, and my client base is, in the performing arts, but also in a variety of sectors. And the overhead, depending on the sector, is just much different. And depending on contributions you get in that year, the percentage is different as well. So there's no, I don't think there's any good rule of thumb. And as I said, the whole concept is fraught as far as I'm concerned.
It is. I mean, because also nothing makes me a little crazier than a little too retail-based fundraising, not to, because it's just, sell the mission. Because we get ourselves into traps when we go too far down the restricted path and are too specific.
That's so true. I love that idea of selling the mission rather than trying to say, here's the specific project you will be funding. Sometimes you have to go down that route because of the funder, because of the grantor. But if you can avoid that and simply ask for operating support, which can cover whatever it covers, that's the ideal.
Oscar Eustace at the Public Theater would do a speech about why we needed free Shakespeare in the park and how it was the cornerstone of a civilized society. And you would hear him give this speech and you would want to give money, but it really was he was selling the mission of the Public Theater, not selling something specific, and why it was valued as part of our culture. And I think that, I don't know, it always has struck me as an extremely good way to sell something. Just you need to talk about its intrinsic value, because I do think we get caught in traps when we go down this, and then you're like, oh, this costs this, and so you need to raise this, but then this year it costs this amount, and then the pandemic messes everything up, and you're just in a crazy circle.
And then donors feel like they've solved a problem if you say, oh, 10,000 for this, instead of our partners in contributing to change in the world. Because you will be coming back to them the following year for another gift. And that assumption of just purchase this, XYZ for our organization makes it feel like it's a one and done kind of, ask.
It's funny. I just got this text while we were on this thing. I am the ED of a small dance company, and they're having a set design budget meeting. And, the dance company is in a world that it's transitioning in its model, and we have a large deficit for the year. And somebody just asked me if they're going to have a $4,000 overage, and can we go ask an individual for that money? I'm like, no, I have a deficit. It's like people, when you go down these specific amounts, they think it's all fine. And it's like the wrong way to think of it. Not until the deficit is filled can they go out and raise additional funds, and it doesn't help. But it just made me laugh because I did just get that question, and I wrote back no.
Just adding to the deficit.
Like I hadn't asked for money for that already, so sorry. It's hard to be the fundraiser and the finance person at the same time.
I know. That's challenging.
Yeah.
That's awesome. All right.
Well, we just had one other question that came through in the chat that I was thinking on a little bit as we were getting into a conversation of specifically smaller organizations and thinking of organizations that have not yet been able to fund or facilitate a full-scale audit. Al Hassan on this call mentioned, like, what's the process of sort of an organization being ready to have their first audit and be able to afford to do that? Because Andrea, as you were saying earlier, it's not without expense to do that.
So a couple of things. I mean, in a way, if you're in New York, different states have different requirements. They're all over the map. New York State, an audit threshold is $1 million. And anybody who's asking you for an audit below that, I think you should push back on. I would argue that it is unfair to add to that burden for money, and then make sure that it has to offset the cost. Your grant needs to be at least as much as the cost of the audit. But that said, we will send out, when I send out an RFP for audit services, I always ask them to lock my price in for 3 years. And they might step it up. Maybe it's, one price, may have small increases over the 3 years, but you have a price, you can budget. So much of our problems is for budgeting, right? We need to be able to plan. But then the smaller the firm, the smaller the fee. I have an auditor. I have a sole sole practitioner auditor that will do it, and she's pretty decent. I will give out her name sparingly because I am almost at her capacity, but she's like 6,000. But I could go to a medium-sized firm because I think nobody should be touched. Not nobody. You should be well over 30 million budget size before you touch any of the big auditing firms. They cost too much. The amount of work they want from you is not in line with your organization, and it'll put a burden on you both financially and workload wise. If you find a good sole practitioner, you can get a decent price. You could get it below $10,000. It is still more than a review or just a 990. But it is part of the cost of doing business. But you can get a wide range of prices. I have gotten, from 6,000 to 20,000 for the same smaller organization by different size firms. But very much the price seems to be in line with the size of the firm.
I would say also that since you mentioned a review, there have been times with small organizations that even in a grant application that required an audit, we offered up a review, especially if it's a new organization, small organization, talked with the program officer about it, and that was an acceptable replacement for an audit. So if that's why you want, that's the reason from my perspective as a fundraiser, why I need the audit most is for a grant application or for a very savvy philanthropist who wants to, make sure that all the T's are crossed and I's are dotted. And so that review for a small organization could take the place of that.
So the one thing I'm going to say is I find sometimes the small auditors, the review and the audit is a very similar price. The bigger the auditor, the reviews are cheaper. Mm-hmm. It's like, I don't know if people are in New York. I like to use Lutz & Carr in New York on what I would consider a medium-sized firm. And I don't try to go any bigger than that. At Lutz & Carr, their review is quite a bit cheaper than their audit. And I also think that, the audit threshold has gone up quite a bit in the last couple of years in New York. And also how we think about grants and how we think about what organizations we're funding and what's appropriate overhead for them to have and capacity and all those things that I think you could always ask and push back a little bit. If the state doesn't require you to do an audit, then the grantor should not require you. It is not appropriate on their part. They are adding a burden that is not right and limits access. So that's my 2 cents on it.
Yeah, that's so right. And I think grantors are more and more focused on that and are realizing that they're putting up barriers for smaller organizations or organizations that don't have the staff to take on huge applications. So I think they're more open to that kind of communication and that kind of conversation than they ever have been.
And I'm saying New York's. I just looked at California's the other day. California's audit threshold is 2 million. I believe there is no requirement in Texas because I looked at that recently too. So you need to look at state by state if you're not a New York organization or you're not raising funds in New York. But push back. I think you should always push back on everything that way a little bit, nobody will ever give it to you if you don't ask.
No truer words were ever spoken.
To a bunch of fundraisers, right? You have to ask. I'm sure nobody here has had a boss that said they asked and they never actually did ask.
There's a story for another day, I guess, huh? All right. Well, we're approaching the top of the hour. So I wanted to wrap things up unless there are any final questions. Great. I hope that everybody found this helpful. I know it was a very US and New York centric conversation, but hopefully there was a lot of information that applied everywhere. And reminder again that for the folks who had fundraising questions specifically or development related topics, we will have another coaching session coming up in October with Kathy Hines, who's on the call here. We'll be talking about major gifts. So that'll be about one-on-one conversations with donors who are giving, significant gifts. and what we can learn from Kathy about that. I'm really excited about. Okay, and so we will be sending an email after the meeting once we have a copy of the video of today's session. So we'll email that to you so you can have it and look through it again. If you want to, we'll make sure to also include contact information for Andrea and for us, and we will include that grant budget template that I mentioned. Feel free to reach back out to both of us. So our website is donorly.com, and you can also keep track of us on social if you aren't already. Our handle on all platforms is @_Donorly. And then Andrea, I'll let you tell everybody how to keep in touch with you.
Sure. Yeah. Our website is artsfms.com. And my email is andrea@artsfms.com. And you should feel free if you want to ask me something or want a piece of advice or a couple, we could have I'm happy to have a conversation with anybody if you reach out.
Thank you, Andrea. Thank you for spending the time with us today. It's so helpful and useful to have these conversations. I really enjoyed it. I hope everybody else did as well. And you'll hear from us via email and via our newsletter. Please keep in touch with us. I hope you'll join us for our next session. Really excited about that. And thank you all for coming. Have a great day.
Thanks. Bye.